Start with March 27th U.S. session. This is where the entire structure begins to reset. The base candle forms between the midpoint and the lower boundary of the March 3rd U.S. session box. This is not just a location. This is where the previous move completes, and a new structural phase begins. This area aligns closely with the weekly 0.33 level. That matters because it adds higher time frame weight to what would otherwise look like a simple intraday structure. Time behavior changes here. Before this point, price was moving continuously downward, from one session boundary to the next session boundary. That was relocation. But here, price stops moving. It stays within the same region for an extended period of time. This is not inactivity. This is the market using time to build structure. Volatility reflects this change. The expansion that drove price downward begins to slow. The range narrows. Movement becomes contained. This is compression. Compression is not the absence of movement. It is preparation for movement. Position stabilizes here. Price is no longer extending lower. It is no longer searching for new lows. Instead, it holds within a defined range inside the March 3rd U.S. session box. This is a transition from movement to positioning. Interaction increases significantly. Price does not move in one direction. It tests the lower boundary. Then it moves upward toward the midpoint. Then it returns again. This repetition is not random. This is the market defining equilibrium. Each test provides information. Which side is being accepted? Which side is being rejected? Pressure becomes mixed. Downward pressure is still present because of the prior move, but upward attempts begin to form. This creates internal tension, and tension is what builds direction. Most traders misread this phase. They see sideways movement and assume nothing is happening. But this is the most important phase, because this is where the next move is being constructed. If price can hold this structure and begin to lift gradually, then the next phase will be upward expansion. If price fails to hold this structure and breaks lower again, then the prior move resumes. So this phase is not neutral. It is decisive. It determines whether the market transitions or continues. And the key reference point here remains clear. The weekly 0.33 level is not just a number. It is the center of this entire structure. Now move to March 29th Asia session. This is where the first visible shift occurs. The base candle forms at the breakdown origin from the March 27th U.S. session. This is not a new area. This is where price previously lost structure. Now price is returning to it. More precisely, this area sits between the lower boundary of the March 3rd U.S. session and the upper boundary of the March 24th U.S. session. This creates a transition zone, a zone where price either continues upward or fails and returns downward. Time changes again. Price is no longer holding at the bottom. It begins to move upward into prior structure. This is the first sign that the market is attempting to shift. Volatility expands again, but the direction is important. The previous expansion was downward. This expansion is upward. That difference defines intent. Upward expansion after compression is not random. It is a structural attempt. Position shifts upward. Price moves from the lower region of the March 3rd U.S. session box toward the upper region. This is a relocation attempt back into higher structure. Interaction becomes focused on a single level. The upper boundary of the March 3rd U.S. session box. This level now becomes the most important reference because it determines whether the move is accepted or rejected. Price tests this level directly. It does not avoid it. It moves into it with intent. Pressure becomes directional at this point. If price can hold above this level, then the market accepts a higher position, and the structure shifts upward. If price fails here, then the move remains temporary, and price returns to the lower structure. This is why this phase matters, because it is not just movement, it is decision, and that decision defines the next phase of the market. Now move to March 30th sessions. This is where the structure attempts to resolve. First, the March 30th U.S. session. The base candle forms around the upper boundary of the March 3rd U.S. session box. This positioning shows intent. Price is attempting to hold above prior structure. This is not a test from below anymore. This is an attempt to stay above. But the attempt fails. Price does not maintain position. Instead, it breaks downward out of the March 30th U.S. session box and moves back toward the lower boundary of the March 3rd U.S. session box. Time shows failure. Price cannot sustain time above the structure. Volatility expands downward again. This is not continuation upward. This is rejection. Position shifts back lower. Price loses the higher structure and returns to the lower region. Interaction increases again at the lower boundary. The same level that previously held is now tested again. Pressure becomes downward. The upward attempt does not convert into continuation. It converts into rejection. Now look at March 30th Asia session. The base candle forms at the upper boundary of the March 27th U.S. session box. This level aligns closely with the March 29th Asia session upper boundary. This creates a stacked resistance area. From this position, price attempts to move upward again. It breaks higher and tests the upper region of the March 30th U.S. session. This is a second attempt to shift structure upward. But again, it fails to hold. Price drops back down through the middle region and continues lower. Eventually, price returns again to the lower boundary of the March 27th U.S. session box. This is the same location as the weekly 0.33 level. Time shows repetition. The market is not progressing. It is cycling. Volatility expands, but fails to create distance. This is expansion without follow-through. Position remains trapped within the same structure. Price cannot establish a new higher or lower location. Interaction continues at the same levels repeatedly. The market keeps returning to the same reference points. Pressure alternates without resolution. Upward attempts fail. Downward attempts stall. This creates friction. This is not trend. This is structural conflict. And the center of that conflict is clear. The weekly 0.33 level remains the anchor. Until price can move away and hold away from this level, every move remains temporary, and every expansion returns back to the same place.